It's no secret that investing in stocks can be an alluring way to build wealth. And if you're a beginner investor, we're here to reassure you that it isn't as difficult as it seems. All you need to do to get started is open an online investment account. In this video we will see all important steps for buying stocks, but before that make sure to subscribe to our channel, and don't forget to press the bell icon. So without any further ado, let's get into the video. Books provide a wealth of information and are inexpensive compared to the costs of classes, seminars, and educational DVDs sold across the web. Learning about great investors from the past provides perspective, inspiration, and appreciation for the game which is the stock market. Brokers are either full service or discount. Full-service brokers, as the name implies, give the full range of traditional brokerage services, including financial advice for retirement, healthcare, and everything related to money. They usually only deal with higher net worth clients, and they can charge substantial fees, including a % of your transactions. Once you've chosen a brokerage, you'll need to complete a new account application. This is typically quick and easy, but you'll need to have photo identification handy, such as a driver's license and your social security number. You'll also need your bank account information if you want to fund your new brokerage account using your checking or savings account. You can choose to open a standard brokerage account, or instead establish an individual retirement account, IRA, which confers some pretty nice tax advantages. Without going too deep into the many possible methods of analyzing and selecting individual stocks to buy, the next step is to determine which stocks you'd like to purchase. Only buy stocks that you want to own for many years. Don't buy a stock just because you think it will perform well over the next few weeks or months. Don't put all of your money into just one or two stocks. Even if you're investing only a relatively small amount of money to start, diversify your portfolio by buying a few shares of several different stocks. With the advent of commission-free trading, owning the stocks of many different companies does not incur any additional expense. Different order types exist for stock purchases. The type of order you place to buy stock specifies the conditions under which you want your broker to transact on your behalf. Placing a market order, which instructs your broker to buy the stock immediately and at the best available price, is typically the best order type for buy and hold investors. To place a stock order, access the appropriate section of your brokerage's platform and enter the required information. Your brokerage will typically ask for the company or stock ticker name, whether you want to buy or sell shares, and the dollar amount or how many shares you want. After you tap the Place Order button, your stock purchase should be executed in a matter of seconds, if the order type is a market order. Your portfolio should immediately update to reflect your ownership of the newly purchased shares. A limit order gives you more control over the price at which your trade is executed. If XYZ stock is trading at $100 a share and you think a $95 per share price is more in line with how you value the company, your limit order tells your broker to hold tight and execute your order only when the ask price drops to that level. On the selling side, a limit order tells your broker to part with the shares once the bid rises to the level you set. Limit orders are a good tool for investors buying and selling smaller company stocks, which tend to experience wider spreads, depending on investor activity. Market orders: these types of orders tell your broker to purchase the stock or security immediately, without a guarantee for its price. Market orders are more common than limit orders, especially for those looking to invest long-term. And among their benefits is the fact that as long as there are interested buyers and sellers, your order is guaranteed to be executed. Build your portfolio. The final step in this process is to build out your investment portfolio. Now that you have a brokerage account and know the basics of how to buy and sell stocks, you can keep adding money to your brokerage account and investing in stocks you'd like to own for years to come. As a final thought, while it can be tempting to monitor the performance of your stocks every day, especially at first, it's important to maintain a long-term mindset. Certainly you can and should read quarterly reports and subscribe to news alerts to stay current on each of the companies in which you hold stock. But if your stock's prices decline somewhat, don't sell in a panic, and, if your stock's prices rise by a few dollars, resist the urge to cash out. The best, and easiest, way to build wealth over time is to buy shares of great companies and hold them for as long as the companies remain great. Investing in stocks for the first time might seem overwhelming, but can be simplified by establishing clear goals and utilizing all the tools provided by your online broker. The first step in the investing process is opening a brokerage account, and there are a few key considerations when curating a portfolio, like identifying your timeline and risk tolerance, making a conscious effort to diversify, and deciding what type of stocks are most appropriate for meeting your goals. Avoiding fraud. Stocks in public companies are registered with the SEC, and in most cases, public companies are required to file reports to the SEC quarterly and annually. Annual reports include financial statements that have been audited by an independent audit firm. Information on public companies can be found on the SEC's EDGAR system. So that's it for now. If you liked the video, make sure to give a big thumbs up, and make sure you subscribe to our YouTube channel, and don't forget to press the bell icon so you never miss an update from our side.